The word of the day is whipsaw, as investors cannot figure out what the hell is going on, what is real and what is fake. We're going to get into all of that and much more today on Money Never Sleeps. Thanks for joining us today, everybody. As we get going, do us a favor, hit that like button, subscribe to the channel. Remember, nothing Kevin or I say is financial advice, so please do your own research for making any financial decisions. Kev, we did not do a show on Friday. Kind of wish we had because it was just pure carnage, but you know what? We can talk about it today. The carnage continues. We don't know what is real, what is fake. We got stories coming out that there's a 90-day delay on the tariffs. Nope, that was made up. Trillions of dollars in market cap movement over the course of 15 minutes when that story came out. We saw, an unemployment report that beat expectations to jobs added, but showed that unemployment rate is ticking up. Apparently, an emergency Fed meeting today. I haven't heard the outcome of that. Meanwhile, the tariffs continue. EU is going to impose 25% tariffs. Trump not looking to back down on any of this. No one knows what is going on. Bond yields are all over the place. We're seeing just absolute shenanigans out there. How are you doing with all this carnage? And just give me your overall thoughts on the markets.
I know that anyone who's watching our show knows that you and I called this 3 or 4 weeks ago. We played this too. It's played out perfectly. This is absolutely insane, but Powell's not backing down. Trump's not backing down. The markets are looking for a place to rally, but, I texted you in house earlier, and this is a quote from Jim Carson, who's on the Chicago Board of Options Exchange, known for VIX-X and pretty much anything volatility. Tops are a process, but bottoms are an event. We have not gotten the event. So I'm looking at these charts. I'm telling you, I don't think it's over. Maybe it has a few-day rally, but I still think there's a lot of pain to come. I also would just like to say anyone who is a guru out there on Twitter saying that, oh, no, it's going to 6,000 next. You've been calling that since 5,600. You've gotten me sick to my stomach seeing how many times you thought that this thing was going to bounce. You're not in Joe Biden's bounce markets, right? We're not in the bouncy house of markets where it just goes back and forth up 600 points after going down 20 points. No, it goes down 600 points and you might get 40 points to the upside before it drops another 600. They are not budging. They want this thing to crash. That's just is what it is, right? That's what Powell wants, and that's what Trump wants, and they're playing a game of chicken with every boomer's retirement, pensions and whatever it is that they got in the 401ks, because those things are probably down 20% right now.
There's just so much to kind of talk about here. I don't know how much we're going to look at the charts today. I think there's a lot more to discuss on like a bigger picture view, but all right, where do I want to start with this? I think the market reaction right now, a big part of it is like, we don't know the levels to which Trump is willing to go. Like, no one is backing down. The markets hate uncertainty. Trump brings nothing but uncertainty. So, hoping for like some V-shaped recovery here in the coming days, I think is unlikely. I keep hearing a lot of people talking about like, how is this time different from 2008? So 2008 was my final year of college getting my degree in financial planning. So I had an interesting vantage point on the 2008 collapse because I was in school. I was getting educated by people who were like, deep in the industry, and it was a really scary time. But here's the thing right now. There was an event. There was something that broke that led to 2008. At this point, nothing is broken yet. And that to me is the scariest part is we've seen this type of volatility down. And as far as we know, there's nothing yet broken in the system. There could be, and we just don't know about it at this point. But that is the downside risk right now, and that risk is gigantic. That risk is potentially sending, the S&P down to 4K, the NASDAQ down to 12K. Like, it is absolutely crazy what would happen if we started to see some of these banks fail, if we saw some of these major players in the system get liquidated, get margin called. Like, it is really scary. And I mean, I don't have the perfect answer. I guess if you bought gold a year ago and you had it in your safe or something, maybe that's the only way to feel comfortable at this moment. But it's a really disconcerting time. And yeah, you can have cash available, but is it somewhere safe? Is it somewhere that you're going to be able to get it when you need it? We just don't know. And so that to me is the scariest part, and how this is different from '08 is we haven't seen anything in the system truly fail yet. And being on the precipice of that is really, really disconcerting.
Yeah, and I mean, I think I have an idea of what's probably going to fail. I'm not going to be, saying it's going to fail for sure, but I've kind of looked at what's going on in the world, and I think it's international markets that go first before the U.S. I think the U.S. was kind of the reason why you got these bounces today. It's like, nah, you're not going to dump on us, right? As the Sunday market open, Asia was down like 12%. They had halted trading in there. Italy was down 6% again this morning. The UK opened up lower. The DAX opened up like 8% lower or something like that. So when I look at what's going on around the world, I think international markets are going to get hit first. And I don't think the markets are done. Like, I don't think we're at the Lehman Brothers moment. I think right now we're at Bear Stearns. But saying that it's Lehman Brothers, Bear Stearns right now, who's going to be the player that goes down? My guess it's either I think it's honestly a mixture of two countries. I think it's a mixture of Japan. I think it's a mixture of Switzerland. Switzerland, because the derivatives market is so out of whack, and now UBS is at a lower price than where it was when it acquired Credit Suisse, and they have all that fucking derivative exposure to GameStop. And right now, I don't know if you guys know this, GameStop is the only stock that's held up in these past 3 days. I've literally made money holding GameStop because the memes are just absolutely kicking ass. Fartcoin also doing extremely well.
What a
So
what a fucking like what an absolute clown show this is right now.
I know, but and here's the thing that's really upsetting me. So I think honestly, the UBS is in trouble. I think there's some banks in Japan that are in trouble. The yen carry trade is probably going to unwind. That might be the event that causes the Fed to intervene. I do want to share my screen though for the real reason why this market will continue to crash, and everyone is dead wrong. All right, everyone's saying that we're going by July, we're going to be down at 4,000 for the S&P, or we're going to go to 6,000, then 4,000, or it's in a crash from here. You're all wrong. It all comes down to debt. We're in a debt-based economy, and I have to share this because maybe it's not the best chart that I can make, but I had 5 minutes before the show, and I just wanted to kind of iterate what I'm seeing. So the sine curve, the bell curve that we're looking at is the amount of loans that we're taking out in 2020, right after the pandemic, right? So obviously, the majority of those loans that we're taking out come to pretty much a top around September, October, November, right around there in 2020. Majority of those loans are 5-year, right? Because the interest rates on U.S. Treasuries were near zero. It was pretty much cheap to borrow money at that point. Now a lot of those loans are coming due. When were the majority of them coming due? Obviously, September, October, November, but they began to take out those loans in March and April of 2020. 5 years later, here we are. They don't have the cash on hand. We know we've been talking about collateral and liquidity shortages for some time now. How are they getting this money? They're selling off the equity market and they're throwing it into this. So what I'm seeing here is, since there's way more trouble coming ahead of us in September, October, November, very similar to how Lehman Brothers went out, obviously, right? The same type of time period. They're going to need a lot of money, a lot of bailout, and the Fed is probably going to have to do something to get these equity markets juiced again so that they could run this all over in those months coming up. So what I'm assuming is that we're going to get the weakest form of QE. Doesn't matter if it's 25 basis points, if it's repo being injected into the system, at some point Powell will pivot. That will juice the markets into the summer. And then when we have the most amount of debt that comes due, that's when you're going to see the most amount of pain. So this is a little bit of, a taste of what's to come, what's going on right now. No one's talking about this either. It's probably the most simple explanation for what's going on there. But I do think that we are going to have some type of event in the next few weeks, probably in this month of April, that causes the Fed to say, you know what, policy has been restricted for a bit too long. We'll cut 25 basis points, or we'll inject repo into the facilities. it's the reason why you're also not seeing any of these big bankers buying. Is Warren Buffett buying? No, he's not, because he kind of can tell that this is the same scenario that he's looking at. Maybe he'll buy in the summer for a quick trade, but to be honest, the man was smart, sitting on $300 billion worth of cash. A lot of these other bankers, JP Morgan, sold off like 30 days before the market started to crash. I mean, this is honestly the easiest market to call if you use this chart, and I think that a lot of people inside the system kind of knew that this was coming due, because they're like, oh shit, we lent out a lot of money at pretty much zero, and a lot of people are going to start calling them if they can't pay it back. Then I guess they're going to have to do something, which would have been selling off equities. So that's kind of what we're looking at, the reason what's going on right now.
Anything in Japan that you think is worth mentioning right now?
Yeah, I got to show the chart for that, but obviously bad night in Japan, 7.83% down. We talked about this over a year ago. I said that this is April 1990. Guys, you got all these gaps down here in the Nikkei. The BOJ is defending. I mean, that's an insane amount of gaps, right? There's probably like 26 here. And it goes all the way down to what? 16,633. So from where we currently are to where all those gaps end, obviously I don't think it's going to go in one shot, but that's at least a 45 to a 50% drop in the equity market in Asia. Are they going to do anything? I don't know. The Bank of Japan owns about 60 to 65% of all of the Nikkei and a lot of those stocks. We know that the Topix, which is the Japanese banks, was down like 12% last night. There's a lot of pain out there in this market, and they're going to try and defend this level. They cannot let this go below August 5th for too long, because once it does, it starts filling some of these gaps. You're probably going to see the yen get stronger and stronger as people sell off, and then that just absolutely fucks the carry trade. We were looking at NVIDIA last night at like $85 or so in pre-market. Didn't do that today. NVIDIA, just to go to it real quick because the two are very heavily correlated. 96.78. So obviously there were some big buyers. We can kind of do this for NVIDIA because it's the first time I think on the show in history. But do you see what I see, Jweb?
Is that a death cross?
The fuck happened to NVIDIA, guys? No one gives two shit about AI.
We're gonna get our money's worth with that clip over the next couple of months. That's for fucking sure.
Yeah, I mean across the board, right? You're filling gaps nonstop. You have a death cross here. You might get a bounce into it. You're having a lot of problems though, I think, with NVIDIA, and especially with Japan. If things get really bad, Japan, if NVIDIA continues to tumble, we talked about this 96 level. It's right where it is. 82 is obviously next, and then below that you have a pretty big move down. You have a lot of gaps. You got a big gap down here at $31. Not saying it's going to go down there in one shot, but they're filling a lot of these gaps, so we're going to keep an eye on that moving forward. But speaking of gaps, I texted you in house last night, and I said the S&P is probably going to go to 5109. Guys, obviously, outside of the stupidity that we saw today that happened in this market, let's go to the hourly. Or actually, no, let's go to the 15-minute. Outside of this bullshit fucking scam wick that we got from a fake news story, where did it go today? 5120. I mean, this is pretty fucking easy market to call. Went right to it, started to get rejected from it. We're due for a wave 4, right? I'm going to go actually to the futures market because the futures market's a better picture to see what's going on here. Get out of the 15-minute. That's nasty. Let's go to the daily. All right, you had 5 moves down. You got 3 ABC up, and now you've got 5. Actually, you only got 4 down. Right now, you're putting in your 4th wave, right? It's not going to go higher than 55.34. That being said, where could it go? It could go a lot lower. And the reason I think that it's going probably between 43 and 45, obviously, maybe it gets cut short of there, whatever the event is. Maybe they save it. It's because if we look at the weekly I think it's on this chart. Is it this chart? No, it is the other one. I think it's the S&P. I was telling you guys yesterday that the Bollinger Band's on, I forget where it is. Maybe it's monthly. Yeah, here it is. It's the monthly. The monthly Bollinger Bands are at 42 right now, right? If we look at the stochastic RSI, obviously we got a little bit more room to the downside. I don't know if we get to 42, but I do think that we get pretty close in the middle of the 45s. I think that coincides with an event happening that causes them to cut. It's going to be very interesting. Are we shorting? Are we longing?
Neither. Doing less.
Yeah. I mean, I saw people talking about trying to find like 5x long ND, QQQ, and what's the other one? The SPY today.
SPY? Yeah.
Yeah, thinking that it was just like the perfect time to buy the bottom. I don't know, guys. It's very possible that even this too is. I'm extremely long. Yes, Leroy, I completely agree. Do less.
This is okay for some. If you've never used leverage before, which if you're watching this show, you probably have no business playing with leverage for the most part. Okay, like you have to do something. I mean, yeah, it's like the bare minimum. This is such a heavily manipulated market at the moment that like you might get lucky and win, but the odds are not in your favor right now. Like you're up against very sophisticated algos. You're up against, a lot of uncertainty. And like I said, a lot of manipulation right here. So yeah. Like trying to play around with leverage for the first time because you think you can cause, you think you can time the bottom is a dangerous game to be playing right now.
I said at the beginning of the show, it's GameStop, man. I mean, GameStop and Fartcoin. Like, if that's my play right now, it's that. Just going to GameStop right now, it's green out of the day. And if we're looking at this, this curve pattern that we've kind of been tracking, it's doing pretty good, guys. It's staying above. It's staying within this. And we said this few days. I mean, obviously, we said it before we had this major crash down here, but we're just trying to fill these gaps out, and it came right to it. There's a lot of shit going on here. Let's get rid of that. Let's get rid of that. Keeping it simple, it's rounding out. We know that there's an OPEX coming up, that a lot of those contracts are going to be coming due. Maybe they get exercised, especially if we start getting in the money. We got a gap right up here at 27. I mean, we also got a gap up here at 32. This is a stock that's so heavily shorted, and Ryan Cohen also deposited all of his stocks into, Charles Schwab today, using margin, most likely to buy more GME. We'll probably find that out in the next day or two. But this is one that could absolutely be what breaks the market and leads Powell to cut. If there's a massive short squeeze and they don't have the liquidity to make good all these buys that they're going to have to make, then guess what? Maybe UBS goes under. Maybe Powell comes out and says, all right, we got to cut shit. But that's just my play. I think this is a safe bet. The other one I'm betting on is FFAI because I know that this is what UBS is holding. This is what I think UBS is holding, to the point where every time GameStop goes up, this thing flies up. That's why it stayed within this very similar range to GameStop's chart. Like I said, May of 2024, this thing shot up to $164 a share, and right now it's at 108. This morning I bought some more at 1. So, I mean, there are moves to be made. You just kind of have to understand that, like, this is a very dangerous market if you're trying to play the normal game, right? You have to be kind of an idiot, honestly, right? To be betting on Fartcoin and GameStop and an electric vehicle company that doesn't make vehicles. But
you say idiot for Fartcoin. I say visionary. Like let's get it straight here, okay?
Okay, I agree, but I definitely think of myself as a degen from believing in what I'm investing in so much. Believe BlackRock is actively buying still. Yeah, I mean, this market is going to bounce. I mean, I do think that we are going to get some type of QE, and they're going to buy this bottom. Even if they're not buying a lot right now. I mean, they could DCA, right? And they're probably buying a shit ton of, I don't even know what they'd be buying at this point. I don't know. There's nothing that's lucrative to me at all in this market right now. But again, usually you say that and then the market bounces hard as shit. Outside of that, we should probably look to crypto because that's honestly holding up pretty strong for Bitcoin, at least. Crypto itself, alts were doing pretty bad last night. Let's go to Bitcoin right now. I don't think the pain for Bitcoin is done quite yet either. I texted you guys yesterday and I said, fuck the timeline, 60K. It's possible. It's possible. But we're looking at this right here. Broke out of this trend line. We kind of called that. You said that
was perfect. Yeah, that could not have played out any more spot on.
April 7th, it was the perfect day for it to break out. I don't think it's quite done yet. you're going to get some manipulation. They're going to drop it when they want to. Listen to Think this morning, thinking DCA into Treasuries debt and BTC. Yeah, honestly, I think that's probably the smart move, especially with Treasuries and debt. Short-term Treasuries, I don't necessarily believe that the longer end of the curve is going to be going down anytime soon. But you're going to probably come down to the 73 level for sure for Bitcoin. That's just most likely we're going to find some support. I mean, if you lose that support, then you're looking at 60K, right? That's the worst case scenario. Outside of that, we got to look at some other shit coins like ETH.
Real quick, hold on. On this note, can you pull up MicroStrategy or Micro or Strategy or whatever the fuck their name is? Because I mean, do we know like Sailor's like liquidation levels? Like, do we like this? Could this bring like Bitcoin to its knees?
Yeah, I mean, he's fucked if he just can't get any more debt, right? That's the 100% the only way he's funding this. So if the entire market goes, fucking dry, then he's screwed. And especially if Bitcoin starts going down like crazy, you're probably gonna see that cascading effect going a lot faster. My brother's tracking Sailor liquidation levels. All right, that'd be sweet. Yeah, because I mean, I think once Bitcoin starts going real fast, I mean, you get to below 36K, everyone's kind of fucked in Bitcoin. I don't care what anyone says. That's where the ETFs kind of took off from. I would expect that Sailor would be eating mad dog shit at that point. Below here at 211, it's gonna be pretty interesting. It looks like it's gonna go to 211 at least for MicroStrategy, right? I mean, is that a big move from where it currently is? What is that, like 6%? Actually, it is a big move. It's like 21%. So I can't do math. Yeah, I mean, Bitcoin has held up extremely well given what's happened in the broader market. Usually you see crypto crash before the equities do, and that's like your sign like, oh, something bad's coming. Doesn't mean that something bad isn't coming. I think that's just the thing. Everyone's been wrong so far for the past month saying where the price is going to go, what's going to happen with these tariffs. No one's a fucking expert, right? It literally comes down to debt and who has to pay off what. So seeing Bitcoin right now, seeing alts kind of sell off, somewhat coming back. I mean, alts are pretty shitty right now. XRP last night went all the way down to 162. It's back around 189. ETH went as low as 1411. I mean, it's back up 1553. I still think this one's a fucking piece of shit. I don't like ETH right now. I know Jweb definitely doesn't like ETH right now. Let's see what else we got.
God. Oh, God. This shit. Absolute dog shit.
I mean, Solana even went sub 100. It was at like 95 last night. Yeah, dominance is just really strong still. I mean, it's probably going to put in a new high. Dominance was at 34 on February 2nd. I mean, I wouldn't be surprised if there is another massive sell-off. Even if Bitcoin drops, it's probably going a little bit higher than that previous high. So across the board, everything is just trying to stabilize. I don't think it will. I wanted to pull up, let's see, is it Bera USD? Oh my God, is this one I was supposed to look at, House? The Bera USD? All right, I have no idea what this is. All I know is that
it's fucked.
Yeah, everything. We should have a button that says "It's fucked."
It's fucked.
Not financial advice, but yeah, across the board, everything looks like shit, guys. Thanks for coming to our TED Talk, but serious. This is.
I mean, I think I don't really know from. I guess you could start DCAing if you wanted to, but like, I just don't. I don't, it's what is going to help the market recover right now?
QE.
Yeah. And do we see that? I just don't see Powell giving in at this moment, especially with no progress on tariffs. Those are going to be inflationary. I don't give a shit what some random jerk off on Twitter said, but tariffs aren't actually inflationary. Yes, they are. And because of that, the Fed is in a position where they can't cut rates.
If Jamie Dimon wants rates cut and Larry Fink wants rates cut, rates will be cut. It's kind of a shitty thing to say, but I texted you guys last night. Jamie Dimon was like asking for rates to be cut. You're probably going to see rates get cut at some point, or some type of QE. right? And maybe when that happens, Trump plays a little bit off the tariffs, right? Just a little bit. And the markets feel really good and juiced, and you start seeing shit just, climbing, gapping up, gapping up. But then we're going to be in the same spot in fucking September. I mean, we're going to play back this clip in September, and it's going to be like, oh, well, that was fucking obvious, guys. It's kind of what we're just heading to. And, this was the trajectory that we kind of saw, we've talked about since February, that at some point it was a game of chicken. Something's going to break. They're going to do something to get the markets to feel like, oh, everything's fixed. And then we're going to have our Lehman Brothers. And people are not going to understand that it really does come down to debt coming due and there's being no liquidity in the system. So that's all I got to say today. I know it's kind of just a broad thing that we're looking at. I think that we're going to have this short bounce. I don't know how long, but I think that this bounce that we kind of had might be done. Maybe has like another day or so, and then something stupid is going to fucking happen, and then we're going to be sub 5K again in the S&P. And I'm even looking at some of the future stuff, and I was looking at years ahead too. Like something stupid today. I was like, maybe we'll play this back in 11 years, but one of the highest volatility events we probably will have in our lifetime is September of 2036. Like there's just weird shit in the charts across the board. The NASDAQ, I'm looking at potentially hitting 7.5K. Like that's a scenario that we could look at for next year. Like there's a lot of things. Dow obviously is even worse one. I don't want to bring that one up, but I don't think we're done. I think, I'll be bullish as fuck in a few weeks. Maybe. We'll find out.
Yeah, I also don't think we're done. Everything's going to be okay, though. Like, I know a lot of people are stressed. We're going to be okay. Like,
we're going to get a bounce.
We're going to get a bounce at some point.
Big, I think.
This too shall pass. But don't, if you need to take some time away from looking at the charts, do what's right for you there. This shit will still be here. But appreciate those of you who joined us today. House, Leroy, Scotch and Stocks. Thank you guys for hanging out and commenting and getting in on the fun. We'll be back on Wednesday. Same time, same place. See what is going on in the markets by then. If you haven't yet, like, subscribe, drop a comment, follow us on social media. Twitter is the main spot for Kevin and I. Have a great rest of your day, everybody. Stay safe out there. No, don't leave. Yeah, don't worry. We'll be back on Wednesday. Appreciate you guys. We'll talk to you soon.
Stay safe.